Testing, testing. Good morning, everyone. Let's see, is this thing working? There we go. How's everybody doing this morning? Moving slow, just like the market. Hey, Travis, Moran, Dan, Christian, Hex, how you doing? What's up, Kevin and Jam? Whole crew is here. Beautiful. Good morning, GS on YouTube. So, interesting. We just can't get underneath that 69.05 bid. Our overnight inventory is about 98% long because 98% of the trading is above the previous day's close, which is Friday's close. So we already had an inventory adjustment down to 69.13. It popped right back up like our friend at a shadow trader, Brad, the way he says, it's like a beach ball. You push it under the water and it just pops back up. But what those guys don't say is that's where the bid is, right? So the bid was here, like there's early Globex bid. Then it moved up here. Now it's moved up here. Now let's see if we can hold the 23s as we keep putting in a new high. That previous day high is the target. Hey, Robert Trade, welcome. Oh, you're a fellow knucklehead just like me. Where are you from? I'm a kid from the prairies. And in Bangkok. Nice. I've never been. I've always wanted to go to Thailand. Hey, Marky, what's up? Attila, what's going on? Attila the Hun, how are you doing? Hey, this is the only trading room that has an Attila. That's good to see. Ah, Montréal, Quebec, je me souviens. I love Montreal. Best city in Canada, really. You're from Calgary? Oh, cool. That's cool. All right, so we're putting in a new high. We've got the shorts trapped. Really, at 69.12, moving those stops up. So these stops represent the current bid in the market. Short term, but fairly current. So let's see. Our target is that poor high from Friday. Now the sellers were there. Now, folks who have using my balance zones, I kept the ones from Friday. I kept the balance zones from Friday, and the reason was because of this. you could see the inventory is here, right? The inventory is here in this blue area. We went up and we've been in distribution all night. So despite the news, and I don't know how to interpret the news, because I'm not, as I like to say, a macronutrient guy. I don't know how to interpret the news, so I have to let the chart tell me whether or not there's buying or not, and where the sellers are, right? Right? Metals are up. Let's go take a look at old Chevron, right? Because, oh, what did I do? I disconnected this. I got to get rid of that button. So silver is holding 67.38. Those who trade the silver ETF SLV, and Chevron has gapped up. It did a look above and fail of 171.76. So, and it's down here at 166. It's kind of at the lows of the pre-market. There is a gap, right? So look for that gap to fill. If that gap doesn't fill, it means people who are short underneath the gap are trapped. And they'll milk that bid for as long as they can. Now, because the reason I'm looking at Chevron is because the Wall Street Journal said that they're the stock to look at because they're the only ones who have infrastructure in Venezuela. NVIDIA 191. Let's go take a look at the cool kids and what they're up to. Crabapple 270. The Amazon Rainforest 227. Google, I got to clean up that chart. Goldman Sachs creeping back above 910. Love me some Goldman Sachs. Ever read The Partnership? You know, Weinberg was my hero. Started out as a janitor, became president of the company. Meta, nobody ever asks about that stock, but I have levels if you want. Micro Squish 473. Inventory is above us. Everyone's trapped long above 494. And Palantir, let's see if we can hold those 172s, right? Gold back over 404. Time will tell. And old Muscosaurus clocking in at 444.93. I'd love him to get the stock to $500 and then announce another forward split and then jam the thing up to $1,000. That would be fun. That's what I'd do. Corning, which I love, and this ASML, I'm going to have to do some more levels for this thing because I just started watching it. Oracle, we filled the gap for 3 days, 4 days, and we're still above it. Western Digital, I still have no levels for, but I will. So, all right, we're starting the year. This is the first full trading week, right? So we hit that high. Now, you're going to be looking for buy orders here at 25 because that's where everybody's short underneath on that extension. I am looking for inventory to correct. I still think this is a back and forth market. I have not shorted it since this morning when I took a really quick hit and run short, and I have not traded since then. Hey, Jag, what's up? So let's see how the crookie crumbles here. I'm looking for offers under 69.26. Right? If we can stay under 69.26, see how there's that responsive bid right there? Right here, ladies and gentlemen, is when the market took that T high. And we call our half an hour bars, we give them a letter so we can know where they are. When we took out that high, if you don't have market profile, the high of 12 o'clock UK time, right? Anybody who was short was using that high as a stop. That's why when you revisit that high, you are going to have responsive buying. Responsive buying meaning the short sellers who don't use stops will be bid to cover there. They'll have their lookout bids here. If those lookout bids get hit, they'll move their bids down and we'll be looking at a 22 target. I look for trades both ways, Robert. So when I teach people how to trade, I teach them how to go long first. because when you go long, you get really good at seeing where the selling competition is, and that is what you need to do to be a good short seller, right? So we teach you to go long first like new people. But if you've been trading for a while, right, shorting works beautifully, but the thing is, Robert, you got to short the backside of the move. So when a market goes up, that's the front side of the move. Once it puts in a high and it starts offering lower, you can short the backside. But as you can see, we caught a bid right where I told you we'd catch a bid and straight back up. So I don't mind shorting. I like shorting. I like going long, but the trade has to make business sense, right? So every trade we take, there is a business reason for the trade. I am looking for a short because overnight inventory is 100% long. Now, if you're just joining us, you won't know what the hell I'm talking about. You'll be like, this dude is smoking something special. But that's not the case. What I'm looking at is where the majority of the trading is, and the overnight inventory is used to get rid of inventory from the previous trading session or to cover shorts if the trading session was higher. So we've been in distribution because markets are a market, right? Accumulation, distribution. We found the bid at 26, right back up. Let's see if we could take out that 31 high. So every trade that we do, Robert, is a business transaction. Those business transactions have mechanical reasons for taking them. Nothing in this market happens randomly, and if you believe that markets are random, I have some beautiful oceanfront property in Saskatchewan to sell you. However, let's see what happens here. This thing's coming in a bit. And we need to find the bid pre-market and when the market opens. Now, what does it mean to find the bid? Well, when overnight inventory is long, which means we took the cheap crap that we bought on Friday on the liquidation, and we're selling it higher for profit, because that's what you do when you have a market, right? You buy cheap crap and you sell it at a higher price. Here, it's just we're selling E-mini futures contracts, right, as opposed to silver contracts or whatever it is you're trading. The chart is basically just a sales chart. The chart represents how sales are going. Right? So if we were short, and like say you had shorted 29 on this pullback, we would have had bids at 26 quarter, 26. If you got hit on those bids, great. But if you had 25 bids, you know they're not getting hit. You race and cover. Right? You use intelligence and common sense to trade. Right? You've got to focus. And what we're doing is we're trying to find the bid. Where is the bid? Or as we'd say in Montreal, où est la bid? Or is it le bid? I'm not sure. Either way, where's my opening sticker? Man, I must have deleted it. So we're going to open still inside Friday's range. So I'm short biased, but the chart is telling me, hey, don't be too short biased. Short from here to here, but if the bid is here, don't short at the hole. So let's see now if we can take out that overnight high. We still have 15 minutes to the open. So all sorts of crazy stuff could happen. Right? The position right now, I'm not sure, the guys at our room will understand the entire position is underneath 69.26. So the cost basis of the overnight trading is underneath 69.26. So now we are selling it for profit because it's a market, right? That's what you do in a market, right? That's why we don't call it the stock hot tub or the futures hot tub. Sorry, they put Hot Tub Time Machine on Netflix again, which has got to be one of the greatest movies ever made. And guess what, guys? What have we been looking at all night? That overnight point of control has still not moved higher. So we haven't stayed in one place long enough to sell 3,400 contracts. which means they keep coming for it, right? Price stability induces buying, right? That was a nice little look below and fail of VWAP, right? We do have sellers at 31, and we know that we have sellers up here at 39 and a half, 39 quarter. So let's see how this thing opens up. And remember, today's the first full week starting Monday. And so, but not everybody's back at work, so it's still going to be a speculator's market, which it's showing right now, right? It's a speculation. You know, speculation is taking cheap inventory, selling at a higher price, putting it on sale when no one wants to buy it, that kind of shtick, right? It's a simple business, right? It's a very simple business. Don't overcomplicate it. That's the main thing. It's a very simple business. There's no need to overcomplicate it. Our trades are based on common sense. When supply runs out, we buy a little. Goes up, we sell into it, right? When you first start learning how to trade, learn how to make small amounts of money and keep it, right? Don't swing for the fences. In time, as you gain experience, right, your skill level, see the thing with retail trading, and just anyone really, right? It doesn't have to be a retail trader. But when you first start out, you got an ego and no skill. So what we're trying to do here is we're trying to get the skill level to overtake the ego. And that is when you become a professional. Right? When you realize, oh damn, I don't know what's happening. Maybe I should just sit and wait. Something doesn't seem right, right? That's experience. Right? And I have 34 years of experience, going on 35, and 200 deals under my pocket, under my belt. So I've taken that and I've tried to teach you guys what actually happens in a business so you could execute intelligently. That's the goal, right? Trading boot camp, exactly. That's what I should do. I should do JJ's trading boot camp. Right? Now we're putting in a new high, so the sellers are in charge, okay? And unlike those idiots on YouTube, they say buyers are in control when price is going up. Now let me ask you something. How can a buyer be in control if prices are higher? This is just the dumbest thing I've ever heard. Okay? Sellers are in control when prices are going higher because they get to sell at higher price. People just don't understand that because they've never been a seller. That's the only problem, right? But we can fix that, right? We're gonna teach you how to do this in an intelligent way, right? So you're not freaking out all the time, right? And if you join our trading room at thetradingsyndicate.org, that's what we do. We're there to teach you how the business works. Right? Once you have a fundamental understanding of how this all works and gets put together, then you'll start, as we say, start cooking with gas. It just takes time. It just takes time, a little bit of grit. We'll get you there. Right? I would not buy it up here because we're at 4 times cost basis. Right? Should have bought it a lot cheaper. But hey, hindsight's 20/20. I'm watching how this market opens today. I could get some intelligent information about it. Could you go balls deep on a look below and fail? No problem. I do that every day. Happy Go Leverage. I have 400 videos on this YouTube channel. I think you're just joining us for the first time, and thank you for being with us. But yeah, I go into this in depth. I could talk about this trade for 8 hours, and I don't mean to be a cheesy salesman, but I'm going to be. So forgive me. If you come into our trading room, right, and our trading room is like 29 bucks a month now, you get me and you also get the best AI in trading as a coach. So you get like a 2-for-1 deal. And what that does is it allows us to work over time. I do sessions, execution sessions for the room, solely for the room. And we'll be doing one of these Wednesday. And yeah, that's what I do. I try and teach people this trade. So, right, the simple answer is when a market looks below a level and then comes back up, it's going to come back up, and there's a bunch of different ones. There's a look below and fail, there's a look below and fail, and this is a look below and fail. So there's 3 examples of the trade. They're all different, but the mechanism is once the market looks underneath a level and comes back up, we go long above that level. So the net level is 19 and a quarter. Say we go long at 20.21. We put our stop under 19 and a quarter, and then you put your sell orders out. So as the market goes out, it takes you out of your position, right? The look below and fail, the business reason behind that trade is that the sell orders that have taken the market underneath this level are now complete. The sellers see buyers and they raise price. Very simple. Now, breakouts, I never buy breakouts because I've been taught, you got to understand, I'm a size trader. So I've always traded for the insiders. So if a stock trades 50 million shares that day, I will have sold at least 20 of that 50 million. Okay? So when that happens, my job is to liquidate. I'm like Larry the Liquidator, right? You see me come into a market, they're selling, right? JJ's here, we're selling, right? Let's do some business, we're selling. Okay? So very different to what retail trading is about. Retail traders are conditioned to chase price, right? I never buy a breakout. I sell inventory into a breakout because I am a professional trader, right? I am not a tire biter, right? So you sell into a breakout. That's what you do when you sell size. So if I was long 500 contracts here, as the market broke out, I'd be just boom, 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 boom. Thank you very much. Have a nice day. Right? So when I trade retail, I take these trades. So the look below and fail works nicely, right? I wait for an edge because that's where you get the best discount. If you're looking for a short, we're at the middle of this zone now at 33. We see that there is a seller at 33. If we clean out that seller, we'll be looking at 40 and then 47.25. My levels are based on inventory and cost basis. Your inventory has a cost basis, then you have 2 times inventory for profit and 4 times. So I like to trade at the edges, and I let everybody else go jump on grenades. Let them figure it out. Then I'll take the trade. I do not buy breakouts. That is a sucker's trade, right? That's for people who chase price, right? We love, as someone who has sold, you know how McDonald's has that sign that says billions and billions served? I have literally sold billions and billions of shares and dollars worth of stock into US equity markets from offshore accounts my whole life for the smart money. You buy, they sell. Your stock goes down, they go buy themselves a nice boat. That's how the business works. So what I like to teach retail people is like to teach them how to be long-term greedy. And as I said this morning, what's our goal for this year? Who was listening? Can you use seconds deviation? George, you can use it if it's flat. As soon as it gets volatile, those VWAP deviations become useless as tits on a bowl. Excuse my language. Right? Because they're not a fixed reference. That's why I like these levels that you see in front of you. They are a fixed reference. 69.33 and a quarter is never going to change, but the standard deviations will if volatility comes into a market. You can get away with it if it's not volatile, if it's nice and slow. Look how flat VWAP is. And it's just started to curl up over the last half hour, hour and a half. Right? So the goal for 26 is to make you profitable by turning you into dirty, rotten, bastard scoundrels. People who make money in this business, they are weasels. They'll tell you that they're buying and they'll sell right in your face, right? Look, I've been doing this for 34 years. I've seen at least 10 billionaires created from people who didn't have anything. So I know how this business works, right? So let other people at areas where you don't know what's going on, let the fools go in and lose their money. And you watch and you go, aha, I was maybe thinking of going long here, but oh man, they just got smacked. Right? So now then you know where the seller is, right? You got to be a little sharp. This year we're not going to be suckers. No suckers this year, no blowing up accounts, no revenge trading, FOMO trading, all that bullshit that people spout because they don't have any skill, right? Remember, skill will win over ego in this business every single time. Ego is going to get you a ride on the bus if you have two nickels to rub together at the end of it. Most likely you won't. Right? You want to go long when the sell orders are done. Right? Don't listen to these idiots on YouTube who've never traded size in their life. People who are like, oh, I do volume analysis. Really? Have you ever traded size? No. Have you ever worked out 5 million shares of stock over a week? Right? Have you ever worked out 300 million shares of stock over a 2-year period? Well, you know, then you got no right talking about volume analysis because you wouldn't know it if it hit you over the head with a frying pan. Right? So beware. All right, so we're really putting the boots to the shorts here before the open. Let's open up and see how the cookie crumbles. Let's see what they got in the tickle trunk this week. All right, well done, Raj, well done. So we're open. Look above the overnight high. Remember, the position is underneath us, right? There's a rip of the overnight high. Now, everyone who's short under that overnight high is going to come in bid to cover, right? I didn't buy the breakout, so I'm going to look to see if we do a look above and fail of 47 and a quarter. And then we just stack these boxes. It's so simple. You could trade a golden retriever to do this, right? Looking for 47 quarter, right? And if you're long, your stop is 40. right? Your analysis should be simple, that you could explain it to a 4-year-old or a golden retriever. Why do you want your analysis to be simple? Because you got to save your mental skills for execution, right? All the theory in the world is not going to do you a lick of good when you're getting punched in the face repeatedly. So now we're looking for a seller. Where are they coming in? The sellers aren't desperate yet. We're in the front end of the move. You don't short the front end of the move. That's a fool's game. Wait 30 seconds for the next candle to open, right? I'm still wary about this because I could see position here. Let's see if we hold 42. Bids, bids, bids. No, if we run out of bids, we'll come and test the previous day high. So if you're selling this area and it gets above 42.5, be careful. See how it came right to 40 quarters, stopped, and moved right back up. That was what we call, my friends, a backfill. Now let's see if we can hit 47 quarter, which is exactly 4 times cost basis to the tick, right? I need to see a seller. Where are my sellers, right? So I'm waiting for the next candle. These candles can be kind of big and you might miss the trade. That's okay, right? I'm seeing a seller 42 and under. So if I'm short 40 and 3/8, I'll put a 39 bid in and see if I get hit. I did not get hit at 39 and a quarter. So let's see if we stay above 40 and a quarter, right? I'm short 40.88 on 2 contracts, covering one at 39 and a quarter. And I am flat. Right? Now I'm scalping the micro to see if my brain is working. All right, now this candle opens. Let's see where the sellers step in. You know they sold it. They stepped in here and here. Watch for the top of this candle. If it can't take out the top of that candle, you know the sellers are competing. Right? Give it a little time. Let them caramelize the onions. Here we go. Wait for it. There. There's the seller. See the seller's right here at 44. Okay? So if you wanted to short this thing, that's your warning level. Your stop is 46. Right? Let's see. There's going to be some bids down here at 36. When we took the top of that candle, there'll be a little bit of short covering there. Now let's see if we can stay underneath the previous day high. We see these all the breakout traders, we suckered them. So unless some more buying comes in, we're going to go down and test that 35, 36 level. If we climb above 42, be careful if you're short. Okay? It's not a single print. It's excess, Dark Bunny. That's a cool name. We got Bad Bunny and Dark Bunny. So we're catching some bids. Now we know that there are sellers here. Watch that level. There's your warning. There's your stop, right? And if you're feeling very generous, you can use 47 and a quarter as a stop, right? So let's see. Next candle opens. Hopefully it stays under 40 and a quarter. There we go. Come on. Make sure you have your bids in. Hey, Fish, what's up? Damn it. See, there's just so much responsive buying at that previous day high. Right? Let the shorts tell us here. Right? The shorts are right here. They're coming in. They're the only buyers. Nobody's going to be buying this other than shorts who are covering. So if we accept under that previous day high, see, and the offer is moved from here to here. So now you've got another frame of reference. Do you see how shorting the back end of the move makes more sense? I'm short 39 and I covered at 38 and a quarter. Not the greatest trade, but I do have my bids in when I am short. Because as soon as I'm short, right, I'm short 39.42 on 3, I'm covering the 38, 37 and 3/4 and I'm flat. Now, when I see the offer moving lower and lower and lower, that is the best time to short, right? Next bids are going to be at the overnight high. If that breaks, we'll come back to this little position here at 33. Okay? Beautiful, right? Inventory is correcting. Now, if we can take out this A low at 32, then we got a nice rack of lamb, right? And we'll look for bids at 26. Okay? See how we came in, hit that area, and lifted, right? The offers lifted when we got there. When the offers lift, don't be short, right? So if you were short 40, you could cover 35, 36, make yourself 3 or 4 points on 5E minis, right? Make a living, right? That's what we want to do. We want to teach you how to make a living, right? A little choppy here, right? Which is completely, that's respectable, right? Nothing wrong with being choppy. Choppy is good, right? The wholesalers are making nice money now. Let's see. There should be some selling at that previous day high because we trapped all those poor breakout traders above it. You know what I mean? Hey, Howard, beautiful, brother. Beautiful, beautiful, beautiful. It's exactly what we want, Howard. Make your money, and as they say in that cheesy pirate movie, take what you can and give nothing back. You're scalping. Oh yeah, you like NQ, right? You Fish Lips loves the nightlife. He likes to boogie, so he likes the NQ, right? Then again, he was a nose guard, so nose guards are a little. They like action. Look, we got sellers here. See? Same lessons apply, right? So you got sellers at 42, right? So if you're short, that's your first big warning level. Well done, Raj. Well done, brother. Made your money, got it out of your account. It's the way to do it. It's the only way to fly. I like the first. I like this week of trading. It kind of helps us see where the bids are, see where those institutional buy orders come in. Now, I will not trade this chop, right? This is where you let everybody else get eaten alive. They go long, they go short, they get stopped out. The next thing you know, they're pawning their watch. Right? Let other suckers take the trade. The thing is, you don't have to be first. Is the 10-minute thing a reversal or a fairy tale? You know what? I've never noticed and never kept track. It might be a thing, but Happy Go Leverage, is that like Holly Go Lightly from Blake Edwards' movie? Uh, the thing is, I do not know. I haven't kept the stats. I'm not a stats guy, unfortunately. But if somebody has the stats on that 10 a.m. reversal, right? Let's plug that into the old. Let's plug that into the AI and see what she says. Let her think. See, what I do is because I am a person who gets biased very easily. Like right now, I am short biased like a you know what, but I'm seeing bids at that overnight high. So, good question. Is the 10 o'clock inflection that many track, but its reliability is context dependent? Do you want to test codify a 10 o'clock reversal into your playbook? What are you trading? Equities, futures, crypto, around the equities open? So our AI will jump in there and it'll tell you what if that's true, then we can code for it and look for it. I like to use TPO if I used to use them as an entry in 2016-17 for the single prints. They're great when you have single prints up, when you're shorting and they start filling the prints down. It's a good place to cover. The unfortunate thing is I do most of my execution on the 1 minute candle chart. The reason is because these ranges have gotten ridiculously large. And so I find I can manage my risk much better using a 1 minute candle chart. But I do look for bids, right? And if the single gets, like if we go up and we have single prints and come back down and they don't fill, boom, then there's a bid there. And then I'll go and I'll zone in using the 1 minute chart, right? So like I said, the TPO is a map of the city, right? The 1 minute candle chart, right? So this is a map of the city, and this is a map of the neighborhood we are in currently, right there. So use both, right? You only need one screen. Oh, okay. Let's see what's next. We're in distribution, folks. Distribution is a pain in the butt to trade, right? This is a wholesale distribution market right here. So just chill, drink your coffee, relax. You'll notice I'm not trading all the time, right? That's how you lose all your money. You wait for your setup. And if your setup doesn't happen, guess what? They're not getting my money, right? You will not get my money if my setup does not appear. If my setup appears, I will take the trade and I'll execute ruthlessly. But if my setup does not appear, why in God's name would I be taking the trade? Right? Let's see. Yeah. Hey, let's see. Today, let's test that 10 a.m. thing. Distribution is a pain in the ass to trade, Howard, and you should not trade it. You know what it means for you, distribution? Coffee time. Right? That's why we have, and that's why you use your look below and fail, right? So you don't have to trade distribution. When you see distribution, you're like, okay, now let's see if we can take out. See, we took out the seller here because we saw bids. We took out, when you get to a level, the sellers are waiting there and they see buyers lining up, they'll lift their offer. The offer is the red line. Watch the red line. If the offer lifts, we're looking for 47 and a quarter. Let's see if we get up there. Nice and simple. Right? Now, the mini position for the last 15 minutes is underneath 41, 42. So we're going to go take that and sell it. So we hit 47 quarter. Do we look above, fail? Do we look above and go? All right, let's see who comes into the store here. There we go, right? Give it some time. Don't be too eager to short when the position's underneath you. Overnight inventory is long. Have we had any kind of meaningful correction to overnight inventory? No, it's bid, right? Yeah, Dan, here's the thing. I don't talk about overnight reversals at a certain time because what it does is it biases people. So I don't care about any of that stuff, right? Because then you'd be like all ready to short, and if it doesn't short, you're caught off guard. Yeah, blah, 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 right? So why don't we, right, just wait for the proper trade setup, right? And who cares what time it is, right? So this looks like a look above and fail of 47 and a quarter. And if this next candle can't take out 47 and a quarter, that tells us that nobody really wants to buy it up there, and we're going to have to put it on sale. The only problem is there's going to be bids here at 42. So once again, difficult trading. If you're short 46, your stop is 47 and a quarter, but it's got to break 44. So if you have a 43 and 3/4 bid in and it does not get broken, right, there you go. Did you get a print? It printed, but did anybody go? Oh, there we go. There we go. So short 46, stop 47 and 3/4. I mean, stop 47 half, whatever. And you're looking for bids here in the 40s, right? We hit 40 and a quarter. So that's 5, 6 points, right? You don't have to catch the top or the bottom, right? But that is the look above and fail. So you short, stop is here. You short here, and then you put your bids in where the cost basis is. Right? So that, Robert, is a scalp short. Now, if you want to build a position, say you got a big account and you got skill, right? You need money and skill. And you're building a short position here, well, then you've got your warning levels, right? And you're out. If it accepts above 50, you're gone. But if you're building a short position here, right, you're putting, like, say you're short 20 contracts here, right? Say you're short 20 in this area. These are your warning levels. Here's your stop. You put some bids down here at 36, right? Put a bid at 36, 33, 34. If those bids get hit, you know there's supply, and then you're going to bid the market at these levels here, right? You're going to front run VWAP. So if you're short 20 contracts at 44, 43, right? Put your covering bids in already. I do not use initial balance because Mr. Dalton told us not to. So as soon as Jim said, he said that, what, 5 years ago, 6 years ago? As soon as he said it, I stopped looking at it. And I never used it in the first place. Now, there are people who trade initial balance, but it's the first hour of the market. So how does that help you now? It doesn't. See, Dan, my whole thing is let's keep this simple. The less stuff I have to worry about, the better, right? Right? I don't like overcomplicating shit, right? I like keeping things simple. Look above and fail, right? It's simple, right? Look below and fail. It's simple, right? And if you do that, you can use the look below and fail and make 20 grand a day. I've got guys who do it that I've taught to do it. They're making $5, $10, $20,000 a day without overcomplicating their life. They make their money, then they go play golf, right? So you can overcomplicate this. You can totally get into this and dig into it and use every reference and initial balance on a 1 minute and use this chart, that chart, everybody's chart, right? You can do that, and you're welcome to do that, right? I don't have time to futz around. I want to make my money and get out. Like, I'm not here, like they said in that movie, I'm not here for the dental plan, right? I just want to make my money and get the hell out, right? And I think most people would agree with me those people who are, they have jobs, they have families, they got stuff to do, right? They can't be sitting around like just jacking around looking at 50 million things. You know what I mean? Right? I like to keep it simple. The reason is you guys can't process that much information anyway. Right? Like, I mean, let's be real about this. How many things can you hold in your head at the same time? Why don't you just look and say, "Oh crap, there's a seller at 69.40. Let's short and put our stop at 42." And then put some bids down there and see if that seller sells it down underneath 33 and a quarter. If he doesn't, we can cover. Right? It's okay. That's great. You just say, "I'm always going to drag you back to simplicity." Right? Because most people who are doing this, they don't have time to sit in front of a screen for 18 hours and look at every little thing, right? And spend 10,000 hours. They don't have time. They've got families. They've got hockey practice. They got to mow the lawn, or in this case, shovel the sidewalk, right? You people, excuse my language, y'all got shit to do. You can't be sitting around futzing around with every little thing. So keep it really simple. Make your paper. Go enjoy your life. Right? Now, for professional traders, guys who trade prop and stuff like that, in my coaching classes and stuff, I'll happily teach you some very nuanced things. But a beginning trader is not going to be able to trade nuance. They don't even know what the hell it is. Right? You understand it logically because it's the business. Right? So we found bids at 33. We went right up to where that white line is at 41, 42. Right? Listen, the only reason I'm telling you guys not to go down the rabbit hole is I wasted years down that damn rabbit hole. And guess what? There's no rabbits at the bottom of that hole. Your execution suffers because you're looking at 30 things. Right? When you are trading is like being in a street fight. Okay? When you're in a street fight, you're not thinking about Euclidean geometry. Right? Hey, Pollux, how you doing? Happy New Year. Right? You need to find the bid and get your ass to work. Right? We know the bid's 33 now, right? We know we're in distribution. We have a distribution rotation here. Right? Yeah, I used to have tons of chart books on Sierra. Right? Now I just got one. Well, I have an equities book and a crypto book, right? Just to separate all the crap, right? Do not bring philosophy into a dirty street fight, because this is the dirtiest street fight you folks will ever encounter. Because I tell you, the people who run this business, right? I've met guys who sell, who sell rock that have more integrity. This is a dirty street fight. They will take your money. They'll take your house without even thinking twice. So prepare yourselves. Learn a skill, right? That, it's like a teeter-totter, right? You got ego on one side, skill on the other. Right now, there's no skill. It's all ego, right? Because you feel bad about losing money, right? I get it, right? Been there, done that, got the t-shirt. Let your skill overtake your ego, right? And my goodness, the results are fantastic. We'll teach you how. Come to the trading syndicate. Right? We'll teach you when to trade, and we'll teach you when not to trade. Right? This kind of a distribution balance or a distribution cost basis, you can trade once you let it kind of build itself out. You know where to short, you know where to buy, you know where to buy, you know where to sell. Right? That's a rotation. So right now the rotation's pretty much 69.33 to 41. Right? It's a little choppy. I myself am not in the rhythm of the market right now, so I wouldn't trade it. I'd have to sit and concentrate, because I don't take trades off the cuff. Especially with my clients' money, I don't screw around, right? So I will only trade when I'm focused. I did a couple of scalps using the micro. That's probably all I'm going to do today, We get the whole year ahead of us. It's a fresh sheet of paper. I don't want to start losing money on the first full week of the trading. Right? I'm going to sit, I'm going to watch. That's what professional traders do. They're not in there drinking Red Bull trading like crackheads, okay? That's not how professional traders trade. Okay? So, take your time. Just chill out. There's going to be a ton of opportunity this year, right? I can already see this year is not going to be it's not going to be quiet. We already got stuff jumping off, you know? Right? Just take it easy. Yes, distribution is price acceptance at higher prices. The reason is the people who own the stuff down here, my friend, underneath, the guys who own it, the guys and gals who own it down here, as soon as they come to this level, there's a little cost basis, they stop selling. So what happens is when they come down here, the shorts start to cover, they build a wholesale position, they stop selling, and they lift their offer because they see buyers are all waiting. You guys know what support is? Support is unfilled buy orders. Don't let anybody tell you any different, right? And generally those unfilled buy orders come from shorts that are trapped, right? So when you see, and when the other thing is, folks, when you see candles getting small, right? Once the candles start getting really small, that means business is slowing down, right? So when candles get small and slow and the business gets slow, that's when, that's when the coffee cart comes. That's when you take a coffee break and just chill out, right? Because you'll trade and get stopped out 20 or 30 times before you realize, oh, maybe I shouldn't be trading this, right? We want to stop that. We want to help you trade and actually make money. The other thing is we want you to keep the money, right? Got to keep the money. Now, I'm still short biased, but until we break VWAP, really nothing for me to do. Look how much short covering there is here. You want real-time volume analysis? There's the previous day high. Look at all that volume. That's shorts covering. Once they finish covering, we should correct inventory. Sometimes it takes a while for inventory to correct, right? Which gives the long wholesalers who are long underneath 26, it allows them to sell their goods. Thank you, Yoder. News at 10. Hopefully, what is the news? Are they bringing back the McRib? That's the news I'm interested in. So when there's news, I don't try to trade it. I let the suckers get washed out. Then take your trade. There we go. Some bids coming in. See where the sellers are. They sold into it. Exactly, Raj. That's exactly what I'm doing. So like Lear, when it's slow, Lear will go out and work on one of his car projects, right? I'll try and fix something that's broken in the apartment. A fast move means large orders. Don't worry about puking positions, but a large move means a big seller came and banged it down or bought it up. So underneath that previous day high, can we stay underneath the previous day high? If you are a short seller, right, you're shorting this area, right? Right, I'm short 37, covering 35 and a half and 35 and 3/4. Not the greatest trade. Not the greatest trade. I was late. I should have been short up here at 39.38. Right. Let's see if the sellers move down to 40. That would be cool. No, bastards. They stopped right at 34 and lifted the offer. Right? Yes, Lear used to fly Lear jets. That's hence the name. He's a retired pilot who has about 4 unfinished car projects right now. But I don't have a garage to tinker with cars, so I gotta like fix a watch or something that's broken. It keeps me distracted, right? Or you could just go on Bring a Trailer and look at classic cars and fantasy shop. You have to keep yourself distracted in this business. Because even I, as a professional trader, will get that, oh, maybe I should. No. It's nowhere near the edge. It's nowhere near how you do business. But human nature always kind of sneaks in. You know, it's like the Flintstones when he had the devil on one shoulder and the angel on the other, right? If I had a garage, I'd have like, you know, an old busted up British sports car in there and I'd be wrenching on it when it's slow. One of my other guys, he refinishes furniture. You know, find something that keep you occupied so you don't overtrade. Look at these bastards. Look at them go, right? This price stability is bringing buying, right? And the inability to stay underneath the overnight high, right? See, I'm so short biased. I'm going to talk about bias. See, because inventory is almost 98% long. I'm still waiting for that inventory correction. So instead of buying, when B went underneath the overnight low and came back up, I should have been long here, stop here, and selling into this. But I didn't see that because I was short biased. That's why I trade small size at the beginning of a year. So, because you miss things, right? Right? I missed that, right? That was like, in football, that was like a lookout block. That's when you miss your block, you turn around to the quarterback and you go, look out, right? That was a total lookout. I just totally missed that, right? Guilty as charged. Yeah, the great Gazoo from Flintstones. That's what we should call our AI. Where's the cost basis? It's the overnight cost basis, Raj, is like 69.05 to 23.22. So we're like 20 points above cost basis, and we got the shorts by the, excuse my language, the short and curlies. So let's see if we could take out that overnight, I mean the A high, right? It's gonna trip that yeah, that large bid up off the overnight high would be a sign. Exactly. It's a sign I missed because I was short biased. See, and that's why, right? I'll blame it on the guy who said the 10 a.m. reversal. I'm just joking, right? That was completely my fault, missing that long, right? See, that was a little stop run, but do you see how they sold into it when it broke out? Now let's see if we can stay above that A period high, right? You see how they're selling it right there, right? Because the large traders know, right? They see the order flow come in, and the wholesalers are like, you know what? We'll run the stops, and we'll get all those price chasers to chase the breakout, and that's when you shank them, right? Now let's see. At the edge of a zone, at that 47 quarter, right? It's shortable, but if you're short, right? Say you're short 46, 47 and a quarter is your stop. We've seen this movie before, right? This is a rotation. Aha. So now we got a rotation. Twice now they've been competitive selling at 47 quarter half. Boom. Let's see where the bid is now. It's going to, if you're short it down to the bid, right? When the next candle opens in 90 seconds, it's going to tell you, there we go. Can we now offer under 42, under 41? So this is a distribution rotation, right? They sell here and they stop selling here. So there's your rotational box. So once that's established, if that holds, it'll be beautiful because you can just take the short, take the long. Look above and fail, look below and fail, right? And you trade from the edge back into the center. Edge back into the center, right? The reason is because the size traders are on both sides of that 34.5 to 47. What does that mean? That means that if you're a size trader, you will be what we call work the box, right? And what we'll do is in the middle of that box, right at the middle, we'll offer all the way down to the middle. We'll sell all the way down, and then we'll flip to the bid all the way down to 35. So we collect underneath 40, 40, what is that, 42, 41, and then we sell above 40. That's called being both sides, right? So if I called a market maker, if this was back in the day and there were humans instead of ones and zeros doing this, you'd go, hey, right? Call my buddy, my market maker buddy, you'd call Tuna or something, and you'd go, hey, Tuna, what are you doing on ES? Hey, I got 50 from Fidelity, I got this, I got that, I got a little bit of flow here. I'm not doing much on both sides. What do you want to do? You want to buy? You want to sell? You want me to work an order? What's shaking? Right? So yeah, I got 10 for sale. He'll buy them. I got 100 for sale. Can I work it? Right? That's how trading is now. That's all done electronically, and it's done before you can even blink an eye now. Right? So in the time we had that conversation, you could probably do 200 trades with the technology that exists now. But the business is still the same. It's just much more efficient. And that's what algos and electronics do. They've made the delivery of the product, because that's what a market is. We're trying to deliver you a product. Right? Come buy some, then come buy some more. And keep buying it. Right? As one of my old first clients would say, get on the bid, kid. It's a career builder. Right? Buy it here. It'll make all your dreams come true, right? That's what we want. You know what, Dan? I don't look at the RTH open price. Well, I do, but we're so far away from it now, it doesn't matter. That trade used to work really well before the ranges started getting big. So if that coincides with my 1-minute candle levels, then go ahead. Don't worry, Dan. We're going to take all of that information you have and we're going to distill it down where you have a 5-step process. And what's that 5-step? That's going to set you free. You know what I mean? Right? You have a lot of information. Now what we have to do is distill that information down into what is actionable and what works in this market. A lot of the old market profile things don't work in this market because the ranges are so damn big. The order books are so thin, right? So that's why I like using the 1-minute candle chart, because your risk, look at your risk. If you're shorting 46, your risk is 8 ticks, right? And your reward is like coming into the 41s. So if you're short 45, 46, you cover some at 42, you make a couple of points, your risk was nothing, right? If you're going long above 35 and a half, your stop is 34. Maybe if you're feeling like Daddy Warbucks, you can use the bottom of that candle as a stop. But if you're cheap like me and you go long 36, you'll put your stop at 35, right? So risk, because stop outs are a business expense. I want to have as few stop outs as possible. And if I don't, then I want my stop outs to be a small percentage of the money that I make, right? So your stop is two things in the business. Your stop is insurance on your account, right? It's like having an insurance policy. Like you have car insurance, you have house insurance. Why don't you have insurance on your trading account, right? Number two, your stop tells you whether or not the order flow, the flow of customers, is what you think it is. So when you get stopped out, then you can reassess. When I get stopped out, it's usually because I trade too early, right? Because I'm used to being a greedy bastard and hitting the bid first, right? Otherwise, your clients will literally cut your throat, right? So, you can't like, oh, there was a buy order for 200,000 shares at $5. Did you fill it? No, I missed it. Now your client's out $1 million, right? Now your client is out a lot of money, and guess what? You never get another trade as long as you live. And once word gets out that you miss fills, that you're inefficient, well, guess what? You're back to, I don't know, doing trade reconciliation or whatever the heck, wherever you came from. So that is the reason that we trade the way we do, right? So you can identify where the bids, yeah, you're out of a job, right? This is a very unforgiving industry. This is the most cutthroat business in the world, other than maybe like the movie industry. Those dudes are whacked. If you get stopped out and it goes your way, brother, I am right there with you. So what we do now is we use that stop. That's why you trade light the first time. Small size, maybe the micro, to see if that's working, right? Then you can get a sense of the order flow. Now, different markets have different rhythms, right? It's like a slow song, a samba. Sometimes you got thrash metal. Sometimes, exactly, right? So I've never worked in the hitman industry, heck, so I really don't know about that. I'm sure I've met some hitmen in my life, but thank God I didn't have any business there. Yeah. So your stop tells you how you could adjust, because Robert, we're always adjusting our execution, right? Because like Bruce Lee said, we have to be the water. We have to adapt to whatever vessel it is in. This market is a snaky market, right? This is a two-faced snaky market where they trap shorts, then they trap longs, then they trap shorts, and that's just because we have an insane amount of speculative money in the markets now. And this has given rise to the very large prop trader, you know, and those traders, they trade very fast. They have millions of dollars in technology that allows them to execute before we can even think they've executed 500 contracts, right? So it's a different business than it used to be. We have to be faster and trade less. That's the moral of the story, right? I've scalped it a couple of times, Jag, but it's kind of like, right? That always happens to me. I'll take the trade, get stopped out, and then it goes. I'm like, right? So don't worry. If you come hang out at our trading room, we'll teach you how to get away from that. There are methods. And the other thing I do is in our business, in our room, we do price action labs. So we will discuss in detail when the price action changes and how you as a trader will adapt your business plan to suit the price action of the market, right? Because you don't get to say what's going to happen, right? We're scavengers, right? We are real scavengers. We have to scavenge, right? And get paid. Right? That's the big thing. Yeah, it's tricky right now, right? In the immortal words of Run DMC, it's tricky. It's tricky. You got a wedge? Is that like a wedgie? Just joking, just joking. I know what you guys are talking about. Listen, if I don't give the candle guys some grief, right? Who else will? Right? You get the atomic wedgie pattern happening soon. Don't worry, Hex. We're on it. I don't see a short. I don't want to go long at 4 times cost basis. Yeah, I don't want to go short. I mean, I've tried a couple of shorts. So what I'm going to do is I'm going to watch this for the next 15 minutes. And then after this, I'm going to go get my ass to the gym and then come back. Because this is wholesale business right now. There is not much to do. Let's look at our upper stops, right? Let's be proactive, as they say, and go look at our upper stops. So upper stops are like targets, right? So that M high from the 30th, right? And there is an untraded point of control at 51. Now, in quote unquote normal markets, right, as opposed to abnormal markets like we have now, we should see some supply here at 51.25. So from 47.25, can we go up to this 51.25 level? That's an untraded POC, right? Which Peter Resnicek calls that a virgin POC. I don't use that verbiage because I don't want to get canceled. And then we have a stop there. It's an untraded point of control, right? There should be some inventory parked here. If we get above 69.54.25, be careful on the short side. I don't know what kind of order flow is going to come into this weirdo thing, right? We know that we have, I'm just going to mark out all the stops just in case. Oh, there is a gap here, isn't there? Da da da, there was a gap. There was a gap down. Check that out. So that's an area of supply. Abby Normal, exactly. Richard Naples. Do you live in Naples? I saw a lady who has an alligator who walks it who lives in Naples. So those are your upper targets. Jeff, we have not had time to move the POC up. Because every time it kind of stabilizes, it sucks in more buyers. And people keep shorting it. How many people do you think are short here? right? We knew that this was a rotation. Now, when it breaks, you double this rotation to get your target. So that's how this weirdo business is conducted. You take this and you double it, and that will give you your upper targets. So there's a cost basis here. We've reestablished a cost basis. It's distribution, but it's still a cost basis. And if we could stay above 47, we're going to go tickle that 51 area. So you could double it, and this is basically, see, and now you'll have some targets that you can work with, right? So if you just came in, see, I did my balance zone, I kept it from Friday, right? Because it's the same inventory, right? There's no fresh inventory. So we're getting rid of Friday's inventory, you know, and now we're in 8 times, right? 1, 2, 3, 4, 5, 6, 2 more. We are at 8 times cost basis. So anyone who's long, you know, underneath 69.80, well, you're having a beautiful morning, right? You're just sitting there, you know, you're being fed grapes and you're selling contracts. Now, let's see if this is another look above and fail of 47.25. If it is, look for bids underneath 44. Now, that depends on what your definition of acceptance is. So, it accepted for a minute and a half above 47.25. Now it might be doing a look below and fail of 47.25. Now, the market profile guys, their definition of acceptance is 2 half-hour periods. Now, which is useless for us if you're doing a 5-minute trade. So the question I ask for you, kiddo, is how much time do you need to get your business done? Me, I need 30 to 90 seconds to make a little bit of money, right? Not much more than that. If you are a bit slower, right? For me, it's acceptance is how much time do you need to handle your business, right? If you need 20 minutes to handle your business, then for you, acceptance is 20 minutes. Does that make sense? You're a swing trade? Then, yeah, if you're using a swing trade, then use 2 half-hour periods, right? Depending on your length of swing, right? So if you're swing trading over a 3-hour period, you might want to use a 15-minute chart, use a 15-minute, see if it comes back. But the beautiful thing on a swing trade is if you are in a swing trade, right? Say you're swinging long for these hours here, right? What you can do is once you establish your position, say you're long here, right? You can sell a little bit using these levels. So you don't have to wait. Now, a lot of people want to hold their position until the very target. I'm a big believer of selling on the way up and covering on the way down. But that's just me, right? Now, if you're swing trading for a month, that's a completely different thing. Does that make sense? So what is the length of your swing trade? How long are you going to be in it? How big is your account? What is your risk? What is your business reason for the trade? Right? Put all that together and we'll help you do that if you come into our trading room. Love to help. Oh, well, 5 minutes left and I do not see a short just yet. You could watch Stranger Things or just read the Wall Street Journal. How does inventory correct on a monthly basis? When it starts taking out swing lows. Right? So this could be another look below and fail. Hang on, let me show you one sec. You guys watch the minute chart. So as soon as we took out that level here, anybody who was long above it started to bail. Right? And when we took that level, anybody who was long above that level will start to bail out. That's how inventory corrects on a longer term basis, right? So we had distribution during the holidays, and as soon as we started taking out, that's where we trapped everybody long, and they're trapped. You take out that level, they puke into bids, grab all the cheap paper, and right back up. See how it keeps doing the look below and fail of 47 and a quarter? And look where it stops selling off. Right there. Right? So there's a little position here, there's a position here, and there's a position here. Right? And it's distribution which caused people to come into the store. So now when you put it on sale, people go, oh, it's a bargain. Let's buy some. Right? But the flow of customers is not convincing enough for me yet. Right? And I'm starting to get, like, I've been up since 4:30 in the morning, so by now I'm like, it's 3:30 in the UK where I'm visiting, and the sun is starting to set. So time to go to the gym, time to go for a walk, go chill out a little bit, and come back in a little while. Sometimes I got to get away from the screens, especially during chop. You know, during chop, you got to get away from the screens. Do I miss Canada? You know what I really miss about Canada? I miss my redneck buddies. I miss my hillbilly pals. Some of the greatest people in the world. Right? I miss my redneck buddies. Right? I'm originally from Sri Lanka, and I grew up right in the middle of the prairies, the coldest place in the world, in Canada. And it's funny, I was like the only brown kid in my whole school, and I never encountered anything bad. It was people there were just wonderful to me. I've got buddies of mine back in Saskatchewan that I can literally trust with my life. And I miss them. I miss them a lot. But yeah, that's the biggest thing about Canada is I miss the people. Good people, great people. You know, they took me into their homes and they treated me like family. I go back every couple of months just to visit. You know, I haven't been in a little while because I never traveled. I never took a holiday from 95 to 2021. The only holiday I had was 3 weeks when I had my quintuple bypass. So I like kind of looking around Europe. You know, Spain is, sorry, I'm a little off track, but Spain, I find Spain like heaven. You know, Italy's amazing. I mean, Europe is so cool. And when you visit London, you can travel, visit, the UK, you can travel so cheap. So that's what I kind of do. Making up for all the things I never saw when I was sitting in front of 8 screens. So that's why I like making a little bit of money and then being away from the market. Thanks, everyone. Have a wonderful day. Come visit us at thetradingsyndicate.org where you get my knowledge, you get the AI, and we'll teach you how to be a killer, right? Just like Heartbreak Ridge, right? You know, that's what I do for a living, right? I build life takers and heartbreakers. We'll turn you into a machine. So we got trap shorts under 54 for now. Have a wonderful Monday morning. And as always, everyone, do not take candy from strange market makers. Bye for now.